The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 21st day of November. My pleasure to be here Monday through Friday on market days, and of course, lead in Monday through Thursday is always Steve Rhodes, and great show. Thank you, Steve. Thursday, of course, you got Larry Pesavento coming up after me. You've got Daryl Martin. You got Dave White. You got in Las Vegas. You've got Andy Hecht meeting up with Tommy O'Brien, and this is going to be very interesting. So Tom wraps it up 4 o'clock till 6. It's going to be a fascinating session today. All right, talking about a fascinating session. The Dow is up at up 88 at 15,989. The S&P is up 10 at 1792. The QQQ series is up 0.54 at 83.24. The GLD, well, gold got smacked earlier, so the GLD is down 37 cents at 119.76. This is that arch formation that retests, you know, the H formation that comes back and retests the left side low. Got to watch that real closely, because once 1200 goes on gold, it's that whole area of support that's really critical, just about 50 points below. So what we're looking at here is the TLT got smacked. That's bonds got smacked the other day. The TLT is at 102.66, down 12 cents. Now let's go to the technical aspect in the Chapman Wave methodology. Looking at the E-mini S&P December futures, trading up 10 right now at 1789. There was a high of 1799.75 back on the, I should remember the day, back on the 18th of November. We had 2 down days, and that 9-period exponential moving average has been fantastic support both yesterday and today. And what I've got here, if you're looking at Tiger TV, whenever I say that, I always say, oh, Tiger TV, I better just click. There it is. 2 seconds and it's right there. There it is. This is the daily. This is the 120-minute chart. Normally, when you look at my charts, you'll see daily in the middle, on the left, in the middle is the weekly, on the right is the monthly. Why? I love to look at time frames. I love to get the big picture, the medium picture, and the shorter-term picture just in one glance. Look how easy it is. In this case, I've got the shorter term with the daily, and then I've got the very near term with 120. Stop right at the green resistance line, breaks above it. That's going to be positive. This pinky red line right here, that's what I call the inside track, the Chapman Wave inside track resistance zone. Now, the stochastic and MACD have rallied well, but not that great. The price, in fact, has gone a little ahead. It's more like the fast-moving average of the MACD, more like the on-balance volume, in fact, that it's followed. You have to see the stochastic rally as well, and you've got to see the MACD expanding with price as it takes on each successively higher peak. So we'll leave that for now, because right at the 1791 to 1792 area is a lot of resistance. Break to the 1793s, it's another kettle of fish. Kettle of fish? Well, it's another scene altogether. Now, what I'm looking at is the daily chart has held this rising wedge formation. Very often a rising wedge formation creates what I call a cup formation. I always think of the Statue of Liberty holding up that torch. It's just like that. This is the arm, and that's a potential cup formation that's going to form. More importantly, a break above 1800. As soon as it touches 1800, I have to consider that's leg E, and it's very positive in the shorter term for the E-minis. Just real quickly, then we go to calls. Looking at the Dow, I will talk about this in a moment. There's that Chapman Wave stalk leg template. That's all it is, a template. There's the long leg. There's the body. There's the neck. This is possibly forming the head with the beak coming down here. We'll talk about what that all implies. So far, that peak F top from August the 2nd is matching in time, but not price, very well with the high of the 18th of November at 16,030. That is a peak F/B. What, you just go 1 point above 16,030 to 16,031. that recycles to a new leg. See, I've had a lot of questions about that, especially from people who did 2 weeks ago, who did my all-day webinar on the Chapman Wave methodology. I'll talk about that in a moment. We're going to go to our first caller. We've got Stacy in Denver. Hi, Stacy. How are you?
Good. How you doing, Basil?
Very well, thank you.
I'm returning a call from a few weeks ago when I asked you about Boston Scientific.
Yes.
I did what you recommended, and now I'm looking for a re-entry point for some shares, to buy some shares.
Okay. So, folks, BSX is Boston Scientific Medical Equipment Company. There was a period where, look at this inverted V-shaped pattern in the monthly chart. From $6.09 back in 2000, while the whole market was tanking and doing that terrible stuff for 10 years, well, at least for 5 years, Boston Scientific, BSX, trading at $12.02 right now, up 4 cents, went from $6.09 to $46.10. Now, I got a real major sell signal at that particular point. I think we had one position short, and that was it. And I don't think I actually traded it all that well. I just kept following it because it wormed its way under the 9-period moving average for the next 4 or 5 years. Tried to rally, failed, and then all of a sudden had a fabulous move from $4.97. It's a stock that we had in my opening call, and unfortunately, it's one of those situations where my thinking and the tactics did not concur. My thinking was it was a recovery stock, should do very well. We had a very nice gain in it, but that was nothing to what happened because it subsequently doubled, and it went all the way to $12.48. And now it's made a rectangle formation. And that rectangle formation, what I do when I see that, I immediately just grab the toolbox that I have right here, and I draw a rectangle. And it says, within the rectangle, you might remember, Stacey, what I said, there's a chance that there could be an inside buy signal, which takes you in a shorter time frame, not the weekly time frame, but the daily time frame, to a peak D within that rectangle. Well, lo and behold, we got to a peak D from the low of, let me see what that was, from a low of $11.16. Let me just type that in to make it a little easier because then I can talk boundary levels. 11.16 back in October the 24th. On the 24th, we started, remember the Chapman Wave, what we look for is the lowest, most identified low bar. If the technicals concur, it could go all the way from a peak A to a peak B to a higher peak C and then a higher peak D. In this case, it went to 12.15, pulled back very sharply to 11.55, and then over the last 2 days, it's had a nice spike and it's gone to 12.15. Now it's consolidating. What to do at this particular point? Now, this is very difficult because what you had before, Stacey, was a position play, and you held that and you did very well. Now, the best entry point towards the 11.22 to 11.16 area, let me see, it never really gave you a chance because 11.55 has been the most recent lows.
Right.
So now this is, okay, this is what I'm thinking. Within the context of that rectangle formation, I don't see, if you got it at 11.99, if it was going to continue trying to work its way towards at least the 12.40 area, that's a nice percentage gain, but it's with quite a bit of risk.
Right.
Now, as I'm seeing it, because the weekly chart went to a peak E, and this is only a high-level consolidation, my suspicion is, just going to have a look at Covidien here. Olsen Medical Supplies, an Irish company. Yeah, hey, oh, COB. Oh, that was a mistake. Sometimes serendipity does things. So COB I need to look at. A community bank. This is COV. I want to COV. Had a lovely move. I didn't know whether to call that a G or an A. It's also had a retracement. Also, yeah, I think I'm going to do something here that I don't do very often. I'm going to say to you that the risk-reward right in this particular time frame is such that on a percentage basis, the risk to the downside of going from the $12 level that it's at right now, if it starts to take out 11.90 support, you can go all the way to 11.60. So that's 40 cents. 40 cents is a big percentage. It's not a big price, but it's a big percentage. On the upside, the $4 40 cents that it would take is a good risk reward if I just felt more comfortable about the stochastic, and I don't right now. Let me just 120-minute chart. Yeah, it's got this choppiness. A, B, C, D, A, B, C, D, A, B, and it hasn't broken out. All right, that's a lot easier for me. Gosh, I know that you would like this to be a position that you take on, right, at whatever point you start an entry, and you don't really want to go in and out and in and out. That's just my guess, right? You really want to, you want some security as you had before, and I don't think I can give you that security. You know what I'm going to do? I'm going to say I'm going to pass. There are other techniques that I could use right now to say that because the monthly is still so strong, I would like to buy pullbacks, but the risk, as I say, it's at $12 now. Yesterday, it did pull back with the market, and that tells me, and today it's up a little bit from the close yesterday. It's telling me that it's somewhat market vulnerable, but in its own metrics, it's got a range now of at least $12.40 to the upside, and $11.60, that's 40 cents either way. I would feel much more comfortable if you had the patience to wait for a pullback. If it doesn't happen, it's going to get to the top of the range and then pull back again. That's the way I'm thinking of this right now, because that 200-period moving average in the monthly chart at about $12.05, that's a very strong magnet to bring it there and then push it away for a little while longer. I'm going to do that. I'm going to say, if you wanted to only just start on a nibble position right here at $11.99, saying, you know what, even if it goes up the 40 cents, it's not a big percentage gain because it's such a small position. But if what I'm thinking here is if it pulls back in the next 3 sessions to maybe next Wednesday or just before Thanksgiving, next Wednesday, and hasn't taken out 1187, that little tiny position is giving you a lot of information, and you'll be following it much closer than if you're just eyeing it. So that's just the only other way that I would suggest is to nibble on it now. Why? Because if within 3 days it's starting to move towards 1209, that's going to start to show strength to help the stochastic. Whether I say to you add it or not, I don't know. I need to see the chart pattern forming. But that's my thinking. It's in a range. It's in a rectangle. Did exactly pretty much what we were looking at. How to get in. Yet 3 days ago on the dip to 1155, I would have said to you, it's a little risky, but now you're getting closer to the area from which it could bounce. I might have given you the same advice, just to nibble. Now it's just a little harder. You can see what I'm doing. I'm saying you want the next big move, and I think it needs about another 2 weeks or so to digest those gains before I think it's going to, 2-3 weeks maybe, before it's ready to try to break into the 1255, 1270 area. So I'm going to say just hold off for now. Maybe next week let's look at it again, okay?
Sounds good. Thanks a lot, Basil.
Thank you so much for calling. And as Stacey in Denver, Dow is up 90, S&P's up 11. I'll be right back and we'll talk markets.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 89, S&P's up 11. And just a quick question of VNM, which is the Market Vectors Vietnam ETF. Question about it. Yeah, I do like it. I think it's holding very well. It's at 19.39. It really needs to hold the 19.28 to 1920 support on the shorter term, but the weekly chart is improving. The stochastic's at 82%. I like it. I think if you want to hold this as a more intermediate term, you've got to give it a little bit of room, and I'd give it room to the $18.60 support. It's at 19.39 right now. The moment it starts to tackle and break above the candle of June, the week of June the 21st, 20.24, if it does that, that's going to be really positive because it makes 2065, the 200-period exponential moving average, the target. So that's why I look at it. Let's go to Lou in Nashville. Hi, Lou. How are you?
Okay. How are you, Basil?
I'm very well, thank you.
I was just wondering if you could look at the January contract on E-mini natural gas.
Okay, so let me just first do this, if you don't mind. I'm going to the UNG, which is the United States Natural Gas Fund. I like the way it came back in the cup formation and held beautifully at 1691 instead of breaking down to go to the left side low bar of 1659 back on the week of 9th of August. That to me is really positive. Says at worst you should try to make an M pattern going back towards the 1985 level, but if it breaks 20, that'll be the very first time that I get a sign in the monthly chart, let alone the weekly chart, the monthly chart, that this is going to be, let me just make that a little clearer. Yep, that's right. That the monthly chart is starting to improve. So the UNG is in leg D now in the daily chart. MACD is rising nicely. It's at 75%. Sorry, the MACD is rising nicely. The stochastic's at 75% and increasing, looking like it wants to get to 80%. I think on the 120-minute chart, I've got a leg D. It's just a little bit toppy, so maybe it'll come back at 1842 and test 1809 to $18. So that gives me a good sense of what I'm looking at on that contract. Let's go to NGF 14. And, yep, that's also in leg D, same pattern, not the same monthly pattern, not the same weekly pattern. That's a far more negative pattern. I'm going with a continuous contract. I just have found that it gives me an outlook, a much stronger outlook than the futures contract in the nearer months. That's number one. Number two is, do you have any position at all in UNG right now?
No, I was thinking to get in, but I don't know if it's a little bit toppy now or if there'll be a pullback.
Okay, I'm going to make this suggestion, Lou. It's a suggestion that you don't have to jump into right now, but I think timing-wise, I'm going to suggest that because it's done so well since we've been looking at it and it retested so beautifully back on November the 8th, November the 5th, I'm going to suggest that you go ahead and start a small position in the calls. That's really what you're looking at, January calls, right?
No, just the E-mini.
But you're going to go long the E-mini, or you would buy calls on the E-mini?
No, I'll go long.
Okay. So that's just a little bit different, but not all that much different. Here's my thinking. I don't know how many contracts you would be going long.
I'd probably buy one.
One?
Yeah.
Okay, if you're going to go long one, then wow, what a pity, because even just early this morning, before it made the leg D, I would have said that's the best time, because at the $3.72 rather than the $3.76 it's at now, the good support is at 368, or even right down to about 360, even 364. I'd be prepared to have that kind of leeway. I know what I'm thinking. I like the weekly chart, and you're looking at January. Not only that, this is, I don't know how it works out in the winter months, because historically this has been in such a terrible downtrend that I can't get a sense that in the winter months natural gas improves. I'm going to make the suggestion here that you could either start a position, even though it's at 376. Why? Because I'm really looking at the candle of the 25th of October of 390. So if we can get to 390, any pullback after that should turn the 376 area to 368 into pretty good support on the weekly chart. I really think that this is doing very much. I'm going to go back to the UNG chart. I like the UNG chart. It looks closest to my natural gas continuous contract. Actually, we've got a break coming up now. We do have people waiting, but if you don't mind, I'm going to do this. I'm going to go through the break. I'm going to just give you a quick summation of what I'm looking at, the parameters to watch, but my advice is probably going to say to start the position. So hold on, and I'll be right back with Lou and Marvin.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, we're back. So we're on with Lou. So, Lou, this is, if you were going to buy 2 contracts, I would recommend you could get one right now, and then you put in a bid for the second one at 17. This is NG. Let me go to the NG. F14, that I believe is correct. And let me just do that again. NG F14. Yeah, trading at 377. That's the way I would like to look at it. Nibbling here on one and then taking another position. But if you've got only one contract, I would probably say to you, just in terms of risk reward, this is leg D, and in Chapwave and leg D, you've just got to be a little careful. It doesn't mean to say it can pull back, but it very often does in leg D. So I'm thinking here that if the D in the 120-minute chart, well, let me just have a quick look here. A, B, yeah, C, D there as well. Here it is. I would say at about 373 to 372. It's a bit of a compromise. If you have a little patience, if you can get it there, that's the position. If you were getting 2, I'd say get one now and get one at about 370. Put it in at 370 and just wait. That's what and why I think that the weekly is improving, the daily is definitely improving, and if at any point it can break into the 390s. Especially if it does it in the next week, suddenly it's going to be very attractive. So I don't want you to lose the opportunity to be in, but I know that you're a little cautious about getting in because you don't want to see it pull back too much. But you might have to be prepared for a 0.60 or 0.50 pullback. But this is the area. Just money management, I'd prefer if you could get it a little lower down. But I'm looking at it positively. So I hope that helps you. But those are the two parameters. One is either you get in now and you add to it about 50 to 60 cents down, lower, 3.70, somewhere around there. The other is that you just have a little patience and get it just a little bit lower down. I don't know if you're looking at 1.5 to 2 points on the upside, whether it makes such a difference for, 40, 50 cents. But that's what I'm looking at, and I am looking at it positively. That's the most important thing. So I hope that helps you.
I was thinking of putting the order in for tonight anyway.
Yeah, I think so. And you put it in at the price you feel very comfortable with, and just let it be. And I'm sorry, what?
At 0.25.
What did you say? 375?
345.
345. 345 is just way too low. I don't think you're going to get it. Not right now. So if you want to go that low, then I would say don't do that. Rather wait. I think 368 would be the compromise. That's really the level that I would put it in. If you're going to put it in a bit lower, that's the lowest I would put it in. Otherwise, I think it might get away. It might get away from you. But think about what it is. You don't have to rush because you're not going to put it in right now. You are going to wait for a pullback. I would think more in the 370 to 368 area. So I hope that helps you.
Okay, yes it does. Thank you.
Thank you so much for calling. Good to hear from you. Marvin in Orlando. Hi, Marvin. How are you doing?
Hi, Basil. Thanks for taking my call.
It's my pleasure.
I wanted to see if you could tell me if GLD would retest that June low that it had.
Well, everything about it, you asked me the question because it's on your eye as well, right? I mean, it seems so obvious, and there's a certain pattern that I always look for, and that's the H pattern. So let's just look at it. One of the things that I drew a long time ago was the H that goes to an M pattern. My CD introducing the Chapman wave methodology, I talk about the scallops on the way down, these H's that break to the left side support. They keep going low. They keep going low. And then at some point it makes a larger arch formation. That larger arch formation is the beginning of a stabilization of a major move to the downside. And it's absolutely imperative that if it does close in the larger context below 114.68, this is the GLD, the weekly chart with the low in June, I think the last week or so of June. What was it? June the 628. So let me just put that in here. The week of the 28th of June, 114, and right now it's at 119.78. But it's really the weekly chart, the monthly chart, that is my biggest concern. And that monthly chart says, if it takes out 114.68, even if it's just a fraction, then all of a sudden you really have a left side, right side price time match, which takes you to February to test the 102.28 level. So I'm only going to go one step at a time. I don't like to. That's what the chart says, looking out if certain things happen. So I want to do it just based on the weekly chart. The weekly chart says the MACD hasn't actually turned down yet, and yet the GLD has pulled back quite sharply. That is, it hasn't crossed negative. The stochastic has gone all the way from the 80% area down to 2220, and looks like it could go a little bit further. I'm not that happy with the GLD. I think the dollar is the one that's telling us, even though it doesn't look spectacular, it's telling us that some of the strength is going into the dollar and not into gold. So here's what, now, to answer your question, is it possible to get little bounces along the way? Absolutely. You can do that. But the biggest thing about what's happening at this particular point is that I don't think there's going to be a bounce of more than 2 points, maximum 3 points in the GLD before it does some further retesting. So your question, the way you've asked your question, seems to me that you're looking at a kind of a bigger picture and you'd feel more comfortable if it got closer to major support, because that's where you'd like to get. Is that kind of summing up your question?
That's right, yes.
Yeah, and I feel exactly the same way, because it's broken. It just smashed right through the 121.85 after making that peak D top at 131.44 the end of October. And it's making a little doji candle now, and doji candles on the way down seem to have been halfway points. So this is going to be a very important one, and it is rather oversold in any metric. I'm going to suggest this because you are looking at the bigger picture. I'm going to say hold off. I would rather, in my technique, I don't mind catching a falling knife because that's what my technique is all about. But you've got to know that you've got a real tight stop when you're doing that. In this particular instance, I don't have a sign to say that it is so oversold, although there was a volume spike yesterday. If that was the doji low, if we were having a very nice candle today, I'd say that volume spike yesterday can give you a bigger bounce and give you that 2 points to 3 points. At this point, I'm just going to say, I'm going to hold off saying anything about gold getting in. If you're a trader, I don't think you want this as a trade. That's one thing. As a position play, I need to see that the daily is helping the weekly so that it's suspended in midair rather than going into the 117s, which would indicate it's going to go down to the 114s. If it just stops anywhere in this area between 119 and 118 over the next 2-3 days, you can get a counter trend bounce. But that's all I would treat it as right now, counter trend bounce. So hold off, have patience. I'm trying my very best to have patience. I just don't see any real need at this particular point. There was just a moment last week where I thought, wow, if something happens in the Dow and the S&P and they really drop, the Dow drops 300, 400, 500 points, and suddenly gold becomes active, I would trade it because I would think it's making that arch formation, but it couldn't even do that, and the Dow didn't even pull back. I'm going to say hold off. For a bounce, it's not worth it. For a position play of 4 to 6 weeks, I'm holding off. I want to see how the 118-ish area holds. If it takes out 118 and 117 support, I'm not even thinking about touching it because that monthly chart is still very ugly. Hope that helps you.
Okay, thank you very much.
Thank you so much for calling. So, folks, let me just do this. I just want to talk a moment about my opening call. It's my daily service where I give you an extremely intensive look at a bunch of the markets. Sometimes they're almost saying the same things and sometimes they're not, but it's important to be looking at them. And I talked about the Dow. I talked about this Chapman wave stalk leg formation, that you've got the body, you've got the neck, how the head forms, how that move yesterday was important, how I said to subscribers, how it held the 9-period moving average was important today again. Excuse me. And how the MACD hadn't crossed negative, and that's why I couldn't go full out, even though we have a short position, which is still kind of working. Let me just have a check before. Let me see. Yeah, right now it's at about break even. So that's the short position that we have on the Dow. I didn't want to go whole hog to the short side. Yes, we had a beautiful short yesterday for 2 days. It was DDD 3D systems. We were very lucky. We got it at 80.50 and we exited this morning at 70.50. That's unusual on the short side in a bull market to get such a big move. But let me just talk a little bit about Larry said Basil shorts the Dow. Shut the front door, he says. Larry, let me explain this because I want to clarify exactly. I want it to be really clear what I was doing. There was a pattern of 28 days of a rally that started back in June the 24th in the Dow at 40,551. It went to peak A, B, C, D, and then an E, and bumped up against a trend line that goes way back. And that trend line, what I call the inside track, it couldn't break above it. And the peak E at 15,604 on the 23rd of July, it started to pull back, but that pullback kept holding the 9-period moving average. The MACD and stochastic did drop, and suddenly there was a spike. I call it a right arm extension that went to 15,658 on the 28th day of that rally. And on the 2nd of August, it started down because I was looking at it as a potential. There was a potential to break out. I didn't do anything for my subscribers until it actually broke under the 9 EMA, and then we went short. But it was a little late. So we got a real nice move to the downside. I still got out late because you got that fantastic call, Larry, on the 28th, I think it was, of August. Was that the one? No. Later on, you got that call right there, the one in October the 8th. So this one, it went down to the 28th of August at 40,760 and then came back again, also in a symmetrical move to the upside. So what I said to subscribers is that the Dow has gone from the low of the 8th of October, 14,719, to peak ABC. There was an inside wedge formation. It's a little complicated. I don't want to talk about it right now. With a perfect left side to the right side, price time match of 15 days down and 15 days up to where? To the peak D. But then it started to match that pattern from August. It kind of bumped up against the resistance and it pulled back, and I said, I'm going to wait. And we waited, and it went to a peak E on the 7th of November at 50,796 and still kept holding the trend line. Then it formed the pattern that I call the Chapman wave stalk leg formation. A long leg up, then the body. There's the pattern right there. Long leg, body, makes the neck, and then pulls back and goes back into the body. Well, it did that. It went to body, neck, and I wasn't sure yesterday whether that was the beak pulling back. This is a very visual thing. But it held the 9-period moving average, and now we're getting great. And I kept making a big deal about the MACD still being strong. That is the internals. That's the look-back period, the 9-day differential that says there is still internal strength. So I've tightened up the stop on that, and we have another position that we are short a sector, but in fact, I've been kind of light on the short side, and we actually have a number of longs. I even added a long yesterday, which seemed to be doing nicely today. And the longs are, in fact, doing very well. Most of them are doing very well. One is down a little bit. But I'm looking at this, and I'm saying, if that volatility index, I put a lot of stock into that volatility index, and if that volatility index goes only in the 120-minute chart, goes in the 120-minute chart to a D, and then it can't even hold in the 14s, all I can say is that to me is really important, that volatility, until the volatility index is able to hold, let me just do this. I keep doing that. Until the volatility index can hold in the 14.5 to 15 area for a couple of sessions and then climb into the 16s, I just don't think this, I make it real easy. The volatility index for me has always represented buying pressure and selling pressure. Under certain levels, it's buying pressure. Above certain levels, and they change, it's buying pressure. And right now, I have to say that the action in the weekly chart, the week's got another day to go. It's really weird. It's just, it went to the 9 EMA at 13.40, went above it, and now it's down at 12.68. Until I see that bad news comes in and the selling pressure intensifies, I don't know if we're going to be able to sustain a down move. It's just rotational correction. I'll be right back straight after this. Dow is up 95.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, now that we're back, we've got this last segment. Let me just do this. The Russell, the IWM iShares Russell 2000 ETF. It was one of the strongest ETFs. Then it became one of the weakest, and then it became, over the last 2 days, kind of a nice-looking chart saying if it takes out 111.42. It's trading at 111.01 right now, up 167, up 1.52%. If it takes out that, I have to consider it's a leg C, but it doesn't mean a thing because it's underneath the major peak F top at 111.62 made on the 29th of October. If it does take that out decisively and goes over the next 2 days into the 111.70s, there's just a real good chance that this rally could go into next week, and that would be leg E in the weekly chart, held the 9-period moving average, stochastics at 84% in the weekly chart, monthly is in leg E and still moving higher. So it needs, the IWM needs to break 108, and I'm not sure what's going to do that right now. It needs bad news. Bad news is the only thing that's going to take this market down. A high VIX and bad news. Economic news, I don't see where it is right now. So that's the IWM. Look at the Qs, 1, 2, 3. The QQQ series made a peak D. It's now lagging somewhat. It's one of the weaker ones because it hasn't been able to get close to the 84.11 situation. So that's saying to me we could go another couple of days that unless the Qs can break into the 83.50s, and right now they're at 83.24, then I'm going to consider that there's a chance that we've got leg F in the weekly chart, and we'll have to see what happens next week because the stochastics at 93% very strong, but beginning to turn down a little bit. MACD is still very strong. Let's go to the IYC, if I've managed to update that. Let's see. IYC trading made a peak F-top. Now, it is one of the weaker ones. This is the iShare, Dow Jones U.S. Consumer Cyclical. Now, I'll tell you why. I'm starting to put my foot on the brake, and I'm looking for more shorts because there are a couple of things that are happening. Look at the RTH, the retail market vectors retail ETF. The monthly chart has gone right to the trend line that drew ages ago and snuck above it in a leg G/C. Let's forget about the letters. The MACD is still very strong, and the stochastic is very strong at 91%. So it won't be from that I'm getting a signal. But look at the weekly. The weekly, 94%, very strong in the stochastic. MACD is good, but there are signs that this week it couldn't get higher. But we're going into the retail season. That tells me there's a very mixed market out there. There are the weak sectors, and I have to tell you, I suspect that you'll have to book a parking place to get into the malls coming up, starting from after Thanksgiving. That's just my sense of what's going on here. So I don't know if that retail index is going to make a top at 6131 or if it's going to break above, but it is peak E in the daily chart, and the MACD's turned down. The stochastics now at 69%. I'm watching this real closely because it's been a kind of a benchmark all the way along. If I start to get sell signals in the RTH because it cannot rally above 61, let alone where it is right now at 60.39, that's going to say to me, oh, okay, watch that closely. If it takes out 61.31 and goes to 62, this thing can rally right into the end of December. So I'm just watching it real closely. RTH, below 59, problem. Above 61, it says it could go higher. That's the way I'm looking at it right now. Let's look at the TLT. The TLT is saying, where the heck can you put money? That's what people are thinking now. The 102.11 left side of the cup formation back in 23rd of August almost got tested today. It went to 112.16. It's within 5 cents. This is a very critical week for the TLT and bonds altogether. Copper. I'll let Larry, I'm sure Larry will talk about copper, but copper has been pulling back and has just now tested that left side support in the daily, not the weekly. I'll be back tomorrow, folks. Have a fantastic day. Stay tuned for Larry. I'm really looking forward to Larry's show. Should be a fabulous show as always. And have a wonderful day. Basil Chapman signing off. Opening call. Check out the front page. This is the perfect time to get it.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.